Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have back with us Melissa George, who's the founder and CEO of InvestHER Fiduciary Solutions, and we'll be talking about building wealth that lasts. Melissa, welcome back to the program.
Thank you so much, Mike. I'm happy to be back.
Hey, so I am excited to talk about this because I think everybody has certain words that trigger good or bad. But hey, I want to talk about wealth, and I want to talk about wealth that lasts, because you don't want your wealth to go up in smoke. So when you are talking with your clients and giving them the great advice that you give, what are some of those first steps that they should think about and take to make sure that they're on the path to financial independence and security?
Yes. So some of the first steps would include, obviously, establishing a clear vision of what their financial goals are. What do they want retirement to look like? I always try to have them create a picture for me. If you were retiring today in today's dollars, how much money would you need? What are the kinds of things that you would be doing? Creating a realistic budget. Because we all can dream very, very big, but sometimes our dollars don't match the dream. So we want to be very realistic. We want to focus on those foundational things about planning. Obviously making sure that we have an emergency reserve fund. We want to make sure that, our debt is low or or non-existent. And then we can start talking about all those other fun things, right? The trips and the places that we're going to go, our bucket list, all the things that we want to do in retirement, spend time with our grandkids, those kinds of things. So I like us to first get that clear vision, and then we can start building out. Okay, let's look at the resources that you have now. We spend a lot of time during our working years accumulating this bucket of money that we're going to live off of. And then, of course, once we start decumulating, that's when it really, really becomes important that we have to shift the way we're managing our money to make sure it's going to last. We don't want outlast
you said
us.
A mouthful there. I think we can do a whole weekend seminar on that first, opening statement you just made. But one thing that jumps out at me is that whole, the word debt. Because I think, where do you start? Well, for financial independence, we want to make sure you're in the right growth sectors no. Let's start with the foundation and make sure that we don't have money leaking out through the cracks or the holes in the bucket because we cannot control what the government does with spending, which then could increase inflation, which could increase taxes, all those things. We can't control that, but we know that they impact us. But we can control what we spend, and debt is a passion of mine because it is so detrimental. Ooh, that should be a fun word. Detrimental. But it really is. And I love that you said that, because once you get that under control, now more of every dollar that comes in from your income now less is going out to debt and bills, and then now can be deployed as you accumulate, so that when you start decumulating, it's doing the best for you. So I think that's such a spectacular mindset to take.
I love that. I'm going to use that, Mike, and I'm going to
detrimental. Go for it. And if you trademark it, I'll just smile one day and go, that just came out, and I'm glad she ran with it.
I'll definitely give you credit.
Awesome.
That, a lot of clients, prospects, or new clients, when they come to me, some of them are heavily laden with debt. And so even before we can start talking about, putting together a retirement plan or a legacy plan, a estate plan, we have to get that debt down. And so, we're often talking about, creating a budget. Do you have a budget? Or I always talk about how we live in the era of swipe and tap. There used to be a time when people would reconcile their checkbooks. People don't do that anymore. As long as there's still money in the account, we keep swiping and tapping, but we need to have a budget. We need to get that debt down. Obviously, there's different methods to doing that. There's snowball method, there's avalanche method. But it's important to get that down before and build out that foundation first. Everyone wants to jump in and start investing. It's sexy, but man, if you don't have those other components in place, as soon as the hot water heater goes out, as soon as the transmission goes out in the car, as soon as
the dominoes start tumbling.
Absolutely. And then you may have to pull money out of the investment at the wrong time to cover, this emergency that you have. So we got to build the foundation first.
And that makes me think of another thing too, which is just good advice, right? Like if someone goes, "Hey, I've heard that paying," and people will take, both sides of this comment. I should pay off my mortgage, whether you agree with that or not. If someone does decide to do that, if you start paying extra on your mortgage in large amounts and you don't have cash reserves sitting next in your savings account, and one day you go, "Hey, I paid $25,000 on my mortgage extra. Yay. That could be a good decision. But, I need that 20,000. It is in that loan and you can't just get it." So even when you're making financial moves, make sure that it keeps you in a good position. So that has nothing to do with putting money in the best financial instrument to get good rate of returns. This is just good, wise advice.
I so agree. And I would also say that, I do think of financial planning as a creative process. I don't feel like it's cookie cutter for everyone. I think foundation is pretty much the same for everyone, but after you build the foundation, it can be very customized. But that bottom level, having 3 to 6 months of emergency reserves. If you're an entrepreneur, you might want to have 6 to 12. Or if you're a single household, single earning household. So yeah, I think that is critical before people start getting into investing and all the other sexy things that they want to do.
Yeah, the fun things. So I know you work with a lot of women, and you have mentioned that you are a woman of color. So when you work with women of color, what are some of the things that you are saying, okay, now all the basics we need to talk about, but here are some specifics to really overcome some limitations or to help achieve financial empowerment? Where do you kind of go that way?
One of the things that I think is obviously important for all women, but more specifically for women of color. Women of color are at the very, very bottom of the wage gap. And I this is a passion project of mine because obviously I'm a woman of color, and I want all of us to level up. And so I find that a lot of the reasons why are because of lack of access to resources. We've talked previously, Mike, about how women hold things very close to the vest, or they fear. They have some type of fear or a fear of judgment of coming and speaking with an advisor. I often find that also a lot of them are just not even willing to go seek an advisor or a planner for a lot of reasons. Either they think they can't afford it. They're looking for someone that looks like them. And obviously we've already talked about there's a lot fewer Black advisors or Black women advisors in the industry. And it's important because sometimes men or people that are not of color don't have this same cultural sensitivity that is needed to have those conversations with women of color. And so that's one of the things that obviously I could bring to the table because I've experienced it. I continue to experience it. But at the end of the day, I really want women and just people in general to understand that they can find an advisor or a planner that is going to be best suited for them. It may take a little bit of time, but it's time I think it's worth putting forth the effort when you can get that trusted advisor that can provide very, very good advice to help you and your family reach the financial goals that you're setting and build that legacy, build wealth that's going to last.
Because then your advice then resonates so much deeper because they know that you get them. They know that there is, really resonance there and that you're not just treating them like another number and going, okay, next. So yeah, you should have great advice and fiduciary and all of those things. But when you can say, look, been there, done that, got the t-shirt. Let me tell you how I would do it if I were you. And they can tell that you really, really care because it's been said, real is rare.
Mike, I may have to snatch that too. I think that's wonderful.
2 times in one conversation. Go
I know.
it.
But, I do think it's super important. I know for me, I think that, my superpower in the industry is really my ability to connect, right?
Yeah.
I always say that I was my first client. I didn't come from money. I didn't understand the industry. I didn't even know what a financial advisor or planner was until shortly before I came into the industry. And when I came in with people that knew a lot more than me, had more resources than I did. So I had to become my own client first. So yes, when I'm talking with other individuals, people of color, I can honestly say yes, I have been there and done that. I did
Hmm.
start from scratch. And I think that is appealing to some people because they don't
Hmm.
want to feel like they're just working with someone who, you came out the womb, you had a silver spoon in your mouth, and you don't know what
Yeah.
it's like to struggle. Um, I want to show them that, yes, you can struggle, but you can come out of that struggle
Yep.
with proper planning, with some discipline, with, some guided advice and monitoring, some accountability. I've done it for myself. I've done it with many, many other clients, and I want to help others do that as well.
I just love it. So here's something that I want to kind of merge into. I feel like when you look at the concept we're talking about, building wealth that lasts, that infers that wealth sometimes cannot last. So let's talk a little bit about the actual aspect of building wealth that lasts. And I think that anytime you use the word guarantee, all of a sudden it's like, oh, well, you can't guarantee anything. Well, you might not be able to guarantee all results, but talk a little bit about how you're able to work with your clients to help them build wealth that lasts and kind of provide the peace of mind that some of these guaranteed income, maybe recommendations or solutions can bring them.
Yes, so yeah, there are some, as you mentioned, there are some places where we can provide some guarantees, and this becomes really important as people transition from their working to retirement,
Hmm.
um, because we don't have so many decades in front of us. As I often say, I have more days behind me than I have in front of me,
Mm.
but I need to make sure that I can't withstand, a major market fluctuation or correction in front of me, especially when I'm no longer contributing to my
Yeah.
pot of money. Right now, I'm spending it. So it's important that I use products and services that are going to really help me. And there are some equity index products. There are some certain types of annuities, certain types of life products that can really serve us very well. I call them hybrid products because they're not
Hmm.
fixed where you have very, very low rates of return. And on the flip side, they're not variable where you can have high returns and high losses. They're kind of right there in the middle where we
Yeah.
can actually guarantee that the client is never going to lose value in their portfolio. So they're not going to get 100% side, but they're not going to get any of the downside. That
Yeah.
is huge when people are talking about trying to make sure that the wealth that they've created, the assets that they've amassed over their working years will last as long as they do.
You know, I feel like there's people that every time they turn on the news and they see, oh, the markets are down, they're like, oh no. Or they open up their portfolio statement quarterly or however often they come out and they're like tentatively tearing it up and going, what's this going to show? And they see a drop and now their heart sinks. And it's like, at some point, maybe in your 30s, 40s, you can deal with kind of fluctuations because you got plenty of time. You're adding to it or whatever, like you just said. But at some point, you got to circle the wagons. And, we don't need to get into what specific product in this. It doesn't matter. The fact that you said that they are there and you can maybe make some recommendations for people to consider. I want to focus on the peace of mind that brings, because if you're pre or close to being retired and you know that the bulk of your retirement portfolio is locked up and safe and secure, and your friends are coming to you going, oh my word, can you imagine the market just dropped in my portfolio? And you're like, mine didn't move an inch. And they're like, what?
Yeah, yeah. If you could imagine the market dropping and you are not concerned, not in the
Yep.
least, because you know that you've positioned your money where you're not losing anything. You're not beholden to looking at the S&P and the Dow and the NASDAQ every single day. You're not, beholden to looking at, those major companies, Amazon, Tesla, Home Depot, Coca-Cola, et cetera, NVIDIA, what they're doing every single day. I think it's important, at least for a portion of a person's retirement portfolio, that we place it. Basically, they can create their own pension. We can put it in a
Yep.
place where they're never going to have to worry about um, the market dropping. They can have a beneficiary assigned to it. So if they die prematurely, their family members or whomever can benefit from it. But we can still have some money that is still growing for the long term, right? Because when I
Hmm.
retire, if I retire at 60 or 65, I'm still planning to live more than 10 years, right? So, I think
Hmm.
it's about putting together that optimal customized mix for that particular client that's going to serve them well. Because there's nothing worse than retiring in the first couple of years, the market is down and you're pulling money out of your portfolio. That is a recipe for disaster.
Um,
We can eliminate
I
that.
couldn't agree more. Yeah, I mean it's just nuts. And if you hear about a certain thing or a bucket of products, you don't put all your money in that. You keep a nice balance of everything. So that's, when you hear, oh, there are certain types of this or that provide guarantee, it doesn't mean let's divert and now suck everything out of what I've got and put it into that thing. No, it just means this is a nice bucket to have a nice percentage of your portfolio in so that you've got a secure, well-rounded. So that's the point that we're making here. But I think that when people can hear, when there are some products that can provide protection, guarantee, what a huge peace of mind that is.
Yeah, I love it. Sometimes they get a bad rap.
Sure.
But when people actually get to the point of retiring, they want those guarantees.
Yep.
And there are products out there that can provide the guarantees that they're looking for and the protection that they're looking for. I mean, who wants to work all those years and amass, all this money, then all of a sudden,
And then
put it
poof.
someplace. Exactly. Who wants
Yeah,
to do that?
literally.
And when we
Yeah.
talk about wealth that lasts, most of us don't want to just spend it all in retirement. We want to leave something behind for the next generation or two, 2 or 3 generations. So, those are things
You
that we
know,
can, we
that
can do.
that reminds me of a word you said a minute ago, legacy. And I think that, when we were in middle school, we were like, oh, look, I want to get to high school and they look so cool. And then you're like, oh, I want to get to college. And then, oh, as soon as I get married, as soon as I have kids, you're always looking for the next thing. Well, guess what? I think that a lot of people think, okay, at retirement, I need to make sure. And then now from the day I retire to the day I might, die, what age is that? I need to make sure I have enough money. But then you need to look forward. And I think a lot of people don't really fully embrace that word legacy. So I think that if you were to say, or I guess if I would ask you, how can women, the people that you're working with, create that legacy and really fully articulate that so they fully understand that you gotta keep on going, because not only do you want to build this to make sure you're taken care of in retirement, but then what about beyond? What does that look like?
So we can actually look at that in a couple of different ways. Obviously, if I build a business, I might be leaving that business behind for the next generation. That's legacy.
Mm-hmm.
If I have amassed a lot of wealth, a lot of assets, and I don't spend it all in retirement, obviously I can leave that behind. Well, actually, one of the easiest ways to create a legacy, obviously, is with life insurance. And man, the thing about life insurance is that death benefit is tax-free to whomever the beneficiary
Wow.
is. So there's lots of different ways
Yeah.
that we can do that, and it's important working with a planner to really understand, what that looks like from a tax perspective, from how things are titled. Are we looking at creating a trust? I mean, there's so many different ways that can be
Mm-hmm.
done. But again, we got to get through retirement first. So
Right.
it becomes part of that planning process, right? We want to make sure that we can retire. We're not going to outlive our money. And then what's going to happen with, whatever is left over after that? How is that going to be distributed? And, we can even decide how it's distributed, when it's distributed. So, there's a lot of flexibility, but we got to put that planning in place.
We used the word debt earlier, so you don't want to get to retirement or get to the end of your life and still have debt, so that now that becomes a legacy for your family to deal with, right? So that's something you want to avoid. And you don't necessarily want to end your life and get through retirement with $0 because, okay, well, at least I didn't carry debt over to my family, but they didn't get anything. Yeah. So there's that. So it's the whole thing, like begin with the end in mind, but really begin with the legacy in mind of, okay, in a perfect world, I would love to be able to have this go to my family. And when you can structure it in a way, like you said, with, tax favored, distribution to the family, now they're not getting hit. So what and let's go back to that word I was saying, peace of mind. What a peace of mind that is for the retiree that is sitting there working with you going, okay, I know I'm taken care of, and look at what I put into place so that my family is. That's a huge, huge gift that you're providing to your clients and that they're providing to their family.
Yeah, I mean, I think at the end of the day, that's what everyone wants to do. We want to retire with confidence. We want to have peace of mind. You can enjoy your retirement so much better when you already know that I've already put all the pieces in place. I've got the legal documents. I have my emergency reserve fund. I have my monthly income that I'm pulling from these different buckets. I've got my Social Security, which, some people may not have, but I've got my pension, I've got my 401k or my IRA, I've got all the things, and I've already started putting into place what's going to happen if I die prematurely or even if
Yeah.
I live long. And I often say, every single one of us, we're either going to live too long or we're going to die too soon. In all of those
Yeah.
cases, in either case, we want to make sure that we put the planning in place for the best scenario, the worst scenario, and everything in between.
Love it. I tell you what, Melissa, once again, we've just wrapped up a just powerful thought that really should make people go, this is solid. This is deep. So I think it's just spectacular. If someone is listening to this, wanting to learn a little bit more and reach out and connect with you, what's the best way that they can do that?
They can go to my website at InvestHER, HER, Fiduciary Solutions. And once they're on my website, they can actually access my calendar. They can book a free 30-minute Zoom, and I would love to connect.
Awesome. Well, thank you so much for coming back on. It's been a real pleasure talking with you.
Thank you so much, Mike. You have a wonderful day.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.